All right, my beautiful people, that was weird. I'm going to talk about options video. It came up during stream. I want to discuss reading options volume, order flow, options order flow, all of that. And I think this is, I want to show a lot of these plays I made. I'm preparing those videos because I want to make it really, really good because going over the straddles and plays and what, even if you were there in the live streams, we've talked a lot about this, but getting to see the options contracts and the pricing, it's awesome. I want to talk about straddling, but that is more trading, that's more advanced. I want to talk about volume and reading volume because this is something I think a lot of you can learn from. A lot of people make this easy mistake, and it's just one of those quick, easy things people always view before the trade. It's not really as much about the options or all of that. So I'm going to talk about that. If you are new, subscribe to the channel. If you are looking to get into options, all that, we have a live stream on in the morning. We've been kind of consistent with it. It's not going to always be there, but we have the post there. But come tomorrow morning, we'll be on there at 6 a.m. But there's also tutorials. And now too, for all of you guys, if you are on Thinkorswim, Brendan in TTF, he's made a bunch of those tutorials already on this channel about reading order flow and more of this advanced stuff, because this is advanced stuff. I want to give the warning for beginners to know how they read it, because this came up a few times. I was looking at a play with Conroy and we brought it up on stream today too. So wanted to let you guys know that. And yeah, so subscribe, 5 videos a day. It's a lot. Turn on your notifications. You might get mad. Sorry if you do, then don't subscribe. But let's talk about this. So I'm going to show you guys the Tastyworks account. Now you have probably seen this if you've been on the stream. Most of the stuff we've done here is sell premium. And now I sold a spread today and I bought Tesla 400 calls and sold 405s. And honestly, it was a play I regret. I'm only down 50 bucks on it now. We were down 300 at one point, but the whole key to this play, I should have sold it tighter on a spread, and what it was is a call spread. So we could even talk about that a little bit. Essentially how a call spread works here, I went long on the call spread, so I was looking to buy it. So I already had one up. With the mistake I did, I should have went earlier, but here you could kind of see, you see -5 here, -5 here, or 5 here, -5 here. So what I did was I bought 5 of these contracts for 223, and then I sold 5 of these for about 30 or 40 cents. So I collected 200 bucks and then spent $1,000 roughly, but I think I only got like 150. That's why I was mad. So I sold the further out calls, but then bought closer to the money call. So then that way, this is a different trade, but it's similar. You could see my max gain would be $6,000. My max loss would be 1,000. And it says if Tesla winds up above 397 by December 21st, or if it's below there. And this platform is Tastyworks. I recommend this for all of you guys instead of Robinhood or anything. This is my next favorite besides E-Trade. And yeah, I love them. So if you guys want one, I have a referral link in the description since everybody keeps asking me during the stream. So there it is for you. But going back, that's how the spread is intended to work. Now, that's what led me to this, because somebody asked me something about options after I made this play related to options activity, and I thought it was interesting because then even me and Conroy, we did a play where we were looking at this, and Conroy, dude kills it. He wanted to throw he likes to buy the Amazon contracts that are like at the money, worth a lot, and we were going over a strategy, but pretty much he would have had to buy 100 contracts at the money, and it would have literally been like $1 million. It was a $1.6 million order, but it was a good risk reward. He would have bought certain calls in the money and sold certain calls out of the money. So he would buy for $1 million and then sell another $1 million of calls, or $500,000 out of the money. So it had a good risk reward, but that's what also led me to think about this, because now here's on the other chart. You guys, this is like, it's funny because I like it having it here and then going here, because I separate my selling premium from here. It's like a different world, and you could kind of see it. Somebody in the mindset of selling premium is viewing the markets differently. So as you guys now buying options, this is the buying option account, you have to be careful to how you're going to interpret volume. A lot of people ask me, Josh, do you look at total volume, open interest, any of that stuff? I say no. Usually, and I've even did it on that Boeing, my Lulu. You guys could go see the plays. I posted the recaps. a lot of times I'm the only volume, or I'm the one of like 5 people on the open interest. So this is the question now. You saw how I sold that spread on Tesla. I should have done a different one. We could talk about that. But the big key to take from it is how I operate on the spread. I bought a call and then I sold another call. So when I buy the call, I'm showing volume there, but I sold calls at the bid to whomever. And if it wasn't a person, it was a computer who would buy the large quantity. So that was the first example I was showing, because I was letting somebody know on the stream, I may have bought these 400 calls, but then I sold 430. So there's 109 volume. People are like, wow, so like people are here. What's the open interest? What's this? What's that? But at the end of the day, what's really happening here? I sold 5 to someone on the bid. So the volume on the day, I sold it. It could have been to a person or a computer, but the fact was it went up because the volume went up because I sold it. I didn't really think, I'm thinking it's not going to get there essentially, or that's my cap. So I added volume, I added demand, but my interest wasn't saying it's going to 430. So same thing here. We look at the 425. Do we say, well, shit, then these people think it's going to go to 425? No, they could have sold it and they probably bought the 400s and sold the 425s. Me, I should have went and bought the 390s and sold the 410s for $1. That would have been a great one, but these were a lot cheaper earlier. But hopefully you're getting the point, is that they went through at the same time when I did my spread, but it wasn't indicative. And that's why when I was thinking with Conroy's situation, that's why I brought it up, because if we executed that trade and put down $1.6 million, it's so funny because somebody would have gone through and be like, oh my gosh, a whale just bought this many out of the money contracts on Amazon. We should, look what's happening. The stock's going up, but that wouldn't have been the case. He actually would have had a whole different break even, hundreds of dollars below where that contract activity went from. So he doesn't know. And that's the whole point with options. If you're not familiar with selling premium and what I did there, don't worry, ask a question. Let me know how many people aren't familiar. I'll make an in-depth tutorial on it. But the key to it now is that there's many ways to go about an option contract, and you could make money in various ways. Somebody on puts, you could make money on a put if the stock goes up or down with the same put. It's just how you go about the order. And that's what I think a lot of people misunderstand, is that when you see option activity, when you see an order come through, it is not always indicative of what that contract means. It's not implying that. And that's where implied volatility comes from. It could be implying something, but you don't know. You don't know if it's a call sell, a call put. And that's why Thinkorswim actually, I have a way, because somebody asked me how they could scan this. I said the best way, if you are looking at option flow and order flow, see when options are executed at the same time. If it's executed at the same time, it's a spread. But then again, you still don't know if somebody buys 1 million puts or 1 million calls one day. You don't know if they're selling a covered call or covered position. And you don't know if they have a different option that they're hedging, averaging down on, or whatever it may be. So that was really jumpy. I was like, the market's still open, but you don't know that stuff. So reading it is difficult. The next thing on Thinkorswim, there's the option statistics. If you look at the options on Thinkorswim, they have one where you could read the statistics, how many puts versus calls, and they have a statistic that says how many people bought on the ask and how many people bought on the bid. So when you have orders on the bid versus the ask, bid could indicate selling. So if there's a lot of orders at the bid, that means either people wanted to get out real quick, but more likely the people selling at the bid are the premium sellers, and vice versa. That you would have people that if they're trying to cover, you would see people buying more on, there would be more ask orders. So that's one thing to look at. Jax is pretty excited about it, right, buddy? Okay, he's not really that excited. But hopefully you guys don't make this mistake. And it's not really a mistake, but it's only a mistake if you're saying, wow, and this is an order, this guy put millions of dollars, I'm going to follow it. No, because he probably just made a bunch of money selling premium. You don't know what it indicates, but be smart about it. Hopefully you guys avoid this mistake is what I'm trying to say. Hopefully it leads to better trading and you guys could get to your analysis a little better and get, more down with the options, how these are working, how it's supposed to flow and function. And you see, it's exciting, it's complex, but also simple once you kind of get the understanding. It's like driving a stick shift car. So it's not easy. Trading's not going to be easy, but once you kind of get in the motions, then it just, a lot more things make sense. It's like, and I think with understanding options volume and understanding the various ways people make money on options contracts and how it doesn't indicate a certain position, that's like really understanding what a clutch does. You know, a clutch, you might drive stick and get a hold of it, but you don't really understand what it does and how it stops the revs and all that until you're really driving it. So I'll leave it there. Jax is bitching. I hope you guys enjoyed it. Let me know what questions you have on this. If you guys ever fell for this, tell me the first time you ever saw some order and you're like, oh my gosh, because I know we've all been there. So subscribe, like the video. Love you all. Peace.